This is FinTech Insider News. This week, Curve launches Curve Pay, competing with Apple Pay in Europe. Google launches agentic shopping experiences, and the CFPB plans to ditch its open banking rule. We'll be discussing all of this and more on today's show, so don't go anywhere.
Whatever the occasion, effortless elegance is right this way. Because Hilton brings you new ways to stay courtesy of the Nomad London. And it doesn't stop at award-winning dining in a space draped in velvet and illuminated by vintage chandeliers. No, this day goes beyond with unparalleled personalized service and attentive hospitality. Oh, and did we mention the Nomad London can be booked using your Hilton Honors points at Hilton.com? Hilton, for the stay.
So, you just started using LinkedIn Premium. Now what? Well, on your premium company page, you noticed around 7.5 times more page engagement and 5 times more page views. Well done. And now, new clients are messaging you. All because you're using LinkedIn Premium, which helps you get the business growth you want. Think big, small business. Think big. Start your free trial at linkedin.com/premium small business. That's linkedin.com/premium small business.
Hello and welcome to episode 967 of FinTech Insider. My name's Laura Watkins, Director of Media Marketing at 11FS. And 11FS reigned victorious at this year's British Bank Awards, where we took home the trophy for Consultancy of the Year for the 5th time in 7 years. If you did vote for us as either one of our clients or customers, we'd like to say a big thank you. We couldn't do it without you. And of course, congratulations to the other winners on the night too. Now, we shouldn't spend too long basking in our winning glory, so let's get on to the news and another group of people who we couldn't do this without. This week's panelists, who are on hand to dissect some of the top news stories from the week. So first up, we have a FinTech Insider return for Aditi Subbarao, Strategic Partnerships Lead at Instabase. Welcome back to the show. Please, can you tell us a little bit more about what you've been up to since we last had you on?
Absolutely. Great to be back, as always, Laura. The last few months, or rather even weeks, have been full of all sorts of exciting developments in the world of AI, as I'm sure everybody has seen. So we've been busy staying ahead of those, keeping in touch with what's been going on, and also translating that into how enterprises, especially in the financial services space, can actually incorporate those into their processes. I'm sure we'll be speaking about some of that today as well. So looking forward to the conversation.
Awesome. Well, it's great to have you back with us. And yeah, we will get to many of those points, I'm sure. Next up, we have Eduardo Volta, SVP of Partner Marketing and Business Development at Curve. Great to have you back on the show, Eduardo, this time in a different role to the last time you were here. So we'll be hearing more about Curve's big news in a second, but could you tell us a little bit more about yourself and your role at Curve?
Absolutely. Thanks, Laura. First of all, excited to be back. For me, I'm as you said, I head up the partnership and business development team at Curve. So what we do is, and we'll talk about Curve in a second, but what I do specifically is looking for partnership that allows us to either improve our product proposition or to get better distribution channels or any financial partnership. So anything related to external B2B partnership is under my role at Curve. And I'm excited to talk a bit more about the news.
Amazing. Well, yeah, we will come to that very, very soon. And last but not least, we have a FinTech Insider debut for Kate Flocken, Principal at FS Vector. Welcome to the show, Kate. Could you tell us a little bit more about yourself and your role?
Thank you. Yes, very excited to be here and to chat with all of you today. FS Vector is a US-based advisory and advocacy firm working with clients navigating the federal government here in the US. And there's been a lot happening right now. I know we're going to talk about open banking later in the show with AI, with the crypto scene. There's been a lot keeping us busy. So excited to be here and to chat more about it.
Amazing. Well, great to have you with us. So now we have a full panel. Let's start with the news. So as foreshadowed at the top of the show, our top story is a big one from the world of payments, which is that Curve launches Curve Pay on iOS in the EEA, competing with Apple Pay. This story was in the papers and many other places. Curve has launched Curve Pay on iOS devices across the European Economic Area, positioning itself as a direct competitor to Apple Pay. This move follows Apple's compliance with a European Commission ruling that mandates opening its NFC or near-field communication technology to third-party payment apps, ending Apple's exclusive control over contactless payments on iPhones in the EU. So unlike traditional wallets like Apple Pay, which act as pass-through systems, Curve Pay actively processes transactions, enabling more advanced usability features. Curve's expansion into the iOS ecosystem is part of its broader strategy to offer more competitive and user-friendly payment solutions. And they have raised £37 million to support this initiative and aims to provide banks with alternatives that could reduce the transaction fees typically paid to Apple. In response, Apple has also announced a significant expansion to their digital wallet offering, rolling out their tap-to-pay feature in 8 more European countries. Obviously, we have the perfect person on the panel to start with here. So, Eduardo, this is great news for Curve. Can you tell us a little bit more about the motivations behind this? Why has it sort of been so important for Curve to be the first ones out the gate to take advantage of that sort of Apple ruling?
Yeah, absolutely. I mean, for us, if you think about it, I mean, I want to go a little bit to the origin of Curve. Our mission has been to simplify personal finances and provide customers with an efficient and simple way to manage their money. So if you think about it, Curve has always really been a digital wallet where you could consolidate all of your card payments and your payment method into one single card. What was really missing for us, it was the access to the antenna to turn Curve into effectively a digital wallet that could provide payment from the mobile. But all of the background infrastructure was there already. And so for us, it's super exciting because this news for us is not just a big market launch, but it's also a natural evolution of what we have been doing with Curve for the last 10 years. And the reason why for us it was important to be first is we are a natural born disruptor. So we've been disrupting the industry since the beginning. And so to bring that innovation constantly, to be at the forefront of the innovation is within in our DNA. And we were delighted that we could do it to be delighted to be the first with Apple and to be able to do it on iOS in Europe. So this is super exciting. And as I said, the natural evolution of our company and where we are going with the product.
Yeah, absolutely. I remember like Shahar very early doors, like really protesting against, the Apple's kind of chokehold on that market and basically saying you guys are going to be first out there. Talk us through what exactly you guys are doing that Apple and maybe some other competitors actually can't do in this space and why you're able to go one further, shall we say?
I mean, the key here is the different technology that we leverage. So we talk about wallets like Apple Pay or Google Pay. They are what the industry called pass-through wallet. So think of them as a channel for the transaction to happen from the card to the merchant. Nothing more. They allow you to pay with your mobile. Curve is a completely different technology. Curve captures the transaction and turns it into a Curve transaction. So effectively, when you're making the payment, you have two transactions happening, funding card to Curve and Curve to merchant. Because of that, we can actually capture the transaction, deliver additional value to the consumer that Apple Pay and Google Pay cannot do. Some of these values, we kill FX. So we eliminate FX from all transaction with any card that you're using when you travel abroad. The other thing that we can do is we can move with our patented go back in time. So you can move transaction from one funding card to the other after the transaction, which is something that other players cannot do. And the third key benefit is we can provide additional reward on top of the reward that you're already gaining with your card. So if any card that you're using, Curve will provide rewards on top. So all of these things are features that other player will struggle to replicate because they don't use our technology.
Amazing. Thank you. Thank you for making that clear for me. That was really helpful. Aditi, coming to you, just to bring you in, why do you think this is such a significant move for the digital payments landscape, particularly sort of breaking some of that Apple dominance?
Absolutely. And I think to that point, it almost feels like this might be the first step for effectively like decentralization of the ecosystem itself. Like I was reading up in the sense that Apple, the monopoly on digital payments and digital wallets in the US is 92% of all mobile wallet transactions. Obviously, that's lower in the UK and in Europe, but that's a really significant number. The reason I find this interesting is this may well be one of those rare instances where regulatory action is actually creating and fostering innovation as opposed to suppressing it, which typically tends to be the case. So, as Edo just described, we're having all of these new features. The whole look back in time and be able to change that is something I haven't come across before. And all of these new innovations that are coming up, also to be able to gain a foothold against a very well established incumbent. And that is the perfect fertile ground for new innovations to start up, because you obviously have to provide more upside and new features to get an existing user to be able to shift over. So I definitely think this is a really welcome advance that is happening in allowing a new player, a born challenger, like you described, Eduardo, to be able to come in and offer these products and services which other people couldn't. And if you then transpose that across what's happening in the rest of the world. So this is very much kind of a US, UK, Europe phenomenon at the moment. But if you look further afield, if you see what's happening with digital wallets in, say, LATAM, you have Pix that's doing so well in Brazil. We're expecting digital wallets to supersede even credit card-based transactions very soon. We saw what was happening with WhatsApp payments in India. Like, I think a lot of these things will start emerging very quickly, and we need exactly this kind of almost competitive environment being created to foster that innovation in this space.
And Kate, coming to you, kind of on that regulatory piece driving, as Aditi said, sort of regulation is actually doing good in this instance, literally opening up the space for competition and innovation. What's your take on that? Do you think that will drive further competition in this space?
Yes, and that's such an interesting point. And we're relatively early, in the U.S. here, in a new administration and a new Congress, and the current administration has been making, especially across the financial services space, like a lot of efforts to push the innovation and competition piece. Like, we've seen a lot of, even though there's still a lot of dust to settle, we have a lot of acting heads of agencies and things like that, but kind of increased activation of offices of innovation and congressional committees and leadership in Congress that are really pushing for, we want to see more. We want to see more innovation here. We want to see more competition here. And I think it's early days to see how that will play out. But it's on the innovator side, it's an exciting thing to be hearing.
Definitely. And Edo, coming to you, sort of, what are some of the problems with the digital payments market, either, whether in the UK or beyond, or in Europe? Like, what are the sort of main problems that still need to be solved in this space?
Yeah, I think when you look at the UK, obviously the opening of the NFC runs on a different technology, and Apple will still be charging a fee to access this NFC, which is a problem. That's one of the reasons why the UK, we're not ready to launch in the UK. We are actively working on it, but it's not something we can launch just yet. I think this is an area that regulator could play a part. I mean, the regulator have been fantastic in Europe. As Aditi said, they've opened up opportunities for competitors and challengers. I think the UK regulator can play a part in that, and we would love to see the regulator playing a part in that. So I would say that's at the moment the main challenge. Mm-hmm. And obviously the second challenge is Apple is a respected company. They provided an amazing user experience. So their scale is going to be hard to beat, but that's what we're here for. We're trying to challenge that.
Right. Exactly. You need the sort of David to take on Goliath. Otherwise, nothing will change.
Exactly. That's exactly how we describe it internally.
Oh, there you go. But yeah, I was taking that point. So, attitude, like, Apple is currently, no disrespect, Edo, the more popular digital payment option, has that huge global user base, that strong brand trust. Where may it fall down in this space? Like, how will people kind of turn away from it over time?
So I think there are two things here. The reason they have the kind of usage they do is because of the size, the brand recognition, and the trust that is a consequence of that brand recognition. Often what we see happening, again, coming back to the David versus Goliath example, is incumbency often leads to complacency. And we're already seeing a little bit of that happening with mobile phone usage, right? There are so many people who are die-hard anti-Apple, anti-iOS. I myself have Androids all throughout, and I
My
use
husband's
them.
in that camp too.
Isn't
Will
it?
not touch
Exactly.
Apple.
And I think, especially these days with technology moving the way it is, everything is about modularity. Everything is about interoperability. It is not about being wedded to one tech stack or one ecosystem. And I think that is something that Apple is going to have to start bracing again. So the first element is just the fragmentation, or rather the choice that people want from an ecosystem. And that might be one thing that Apple needs to guard against. But the other thing is also a little bit of the nimbleness that the new challengers, the new providers will bring in. New features, new products, new target customer segments that are very niche and therefore can be customized and specialized for. And all of these things tend to be a lot easier for smaller, newer challengers to manage, as opposed to somebody like Apple. And then there's the geographical element. Again, we already saw the statistics. The US, very different market, very different Apple loyalty. The moment you start going further afield, it is a very different landscape. So I think those would be the areas that I would watch out for if I were Apple.
And if I can just add, for me, it's all about. I agree with everything Aditi said. To add, it's all about consumer choice. Ultimately, that's what we strive for at Curve. We want to give a different option to consumer. That doesn't mean that everybody will stop using Apple. Apple have got a great UX. It's still one of the leading products out there. But with choice come more option and ultimately better consumer products and services.
I think a nice way of putting it is Apple kind of achieved this superiority by taking away the friction from those payments. They made it
Correct.
very seamless. They made it very invisible. It was almost like it's part of your phone. It's part of the offering. You don't even have to think about it. The next step from here on is to make those payments more intelligent and more
Yep.
interactive.
Correct.
So it's almost all of these features that you're providing in terms of analysis, in terms of budgeting, in terms of like prediction, etc. That intelligence is the step that people are leapfrogging Apple to. So now they need to upgrade from the invisibility to the intelligence, and that's something which they will need to think about.
Something else I'm interested in seeing here is how the consumer data privacy issues are handled, because, Apple's made that a big part of their messaging, that's always a priority for them. There's a lot of, I know we're going to get more to this a little bit later, but a huge debate around consumer data privacy in the US and how it should be handled. And I think that's becoming consumers are becoming increasingly aware of that as an issue, and they're looking at that more as, an important thing, kind of who does have my data and what is happening with my information. So I think that's something that, I'll be watching with interest to see how companies handle that moving forward.
Absolutely. And I think that is actually a very interesting segue into our next story, but it does sound like you are all kind of in agreement on everything to do with the sort of Apple chokehold. So Edo, best of luck. Huge congratulations on the launch. We look forward to seeing David beat Goliath.
Thank you very much. I appreciate that.
So our next story is that Google has launched an agentic shopping experience. This story was on Finextra and all over LinkedIn and everywhere else. Google has introduced an agentic shopping experience within its search results, enabling users to set a target price for a product and allow Google's AI agent to make the purchase on their behalf. This feature is part of Google's broader initiative to enhance online shopping through AI-driven tools. This agentic shopping experience is set to roll out in the US in the coming months, aiming to provide users with a more streamlined and personalized online shopping experience. So, Aditi, and maybe as our resident AI expert, can we come to you first on this? Can we unpack this a little bit? What does that actually mean? What does an agentic shopping experience entail? And sort of what does that look like for the end consumer? How much responsibility are you handing over?
So the way I like to think about this, and especially after seeing all the videos from Google and so on, in the olden days, there used to be this concept of a personal shopper. So somebody you can go to who then says, well, this is what you look like. This is your height. This is your body structure. Maybe here is the personal style you have. I recommend going to these shops and buying these things. Or you go to an interior decorator who then says, well, if this is the look you're trying to achieve for your living room, then here are the pieces of furniture. These are some brand retailers. These are some paint shades. Imagine all of that being done by AI as opposed to this person. Now, the similarities here are the fact that that AI, just like your interior decorator or your personal stylist, has all of that data, all of that information about what's available in the market, what the prices are, what their competitive differentiators are, what is on sale, what is not, what might be along the categories that you have defined. The differences are that the personal nuance or the individual tastes, which are very hard to write in a prompt, is something that they might not know. So, an AI agentic experience, especially the way Google has unveiled it recently, automates or uses AI agents to cover what I think of as the 3 phases of shopping. The first one is the decisioning phase. And you could almost sub-break down the decisioning phase in research and evaluation. So you will go and do your research. You look for what is available. You will look for what the solution is to the problem you're trying to solve. So let's say, for example, I'm looking to buy hiking boots because I'm going on a hike. I will run a search and seeing what hiking boots are available, what their features are, what their prices are, and so on. Then I might have the evaluation phase where I actually try them on. Do they fit me? Do they manage my arch? Are they tight enough? Are they loose enough? Whatever it might be. And then the second part of this is the execution, where I will actually go and purchase those shoes. So I'm completing the transaction effectively. Through agentic AI, Google has now offered the ability to be able to do that research entirely online by having a database almost of 50 billion different products, which they call the shopping graph. You can then interact with those. You can ask questions. You can get the AI to give you more information to find out what you need. Comparisons, recommendations, reviews, all of that to enable your research piece. You can then take that one step further and actually do the execution piece as well, where you can literally just tell that agent to buy that for you. You can set targets which say that here is the price that I'm looking to buy this for, and if it ever falls below that price, send me a notification. You can even automatically authorize that agent to buy it for you if it does get to that price or within whatever thresholds you set up. So effectively, it's the automation of the entire purchasing cycle. The coolest thing, and I don't know if any of you have tried this, is you could virtually try on clothes by uploading a full-size picture of you onto the AI. And then you can literally say, well, here's a dress. I want to see how it looks like on me. And I can automatically see how that looks like on me. The AI will take care of overlaying those specific clothes and that specific outfit on my photograph to show me in real life. So again, some really cool stuff that has come out of Google. And it's quite interesting to see where this will all end up taking us.
Amazing. Thank you for unpacking that. That's really interesting. Edo, given that you're the payments expert in the room, how does that work on the payment side? How are you kind of getting the whole, from, find me address to buy me address? How is it all joined up in the back end?
Yeah, I mean, absolutely. This is the whole idea of embedded finance and embedded payment brought to the extreme, really. So we're already used to that payment element being embedded in the experience with when you order an Uber or when you order a Deliveroo. Now we are taking it to the next level where we're basically saying, within certain parameter that can you set, so you're still fully in control, you can decide make that payment happen seamlessly. I effectively pre-authorize within those parameters. That's a brilliant experience for a user. Users are looking for convenience, and we know that even when you look back at my time at Visa and MasterCard, that's what we are trying to build is a seamless consumer experience on the payment side. Obviously, there is the need for the standard of security and solutions around that. So the controls from the customer, the identification, the KYC of the customer needs to be done up front. All of those elements are key. But in terms of convenience for the customer, as a customer, I love it. The payment just goes through and I don't have to worry about it.
Amazing. Kate, not to put the negative on you in particular, but what are the potential drawbacks that could be found with this, particularly maybe on the regulatory or the security and privacy side?
Yeah, so I think a few kind of things that that go through my mind, when I think about it. I mean, first, like, as the individual, as the consumer, when I think about, AI as being for example, like something that's going to give me time back or enhance my productivity. Like, I love the idea of giving over some of the either kind of more mundane type of research tasks, like going through, researching what's the best product for me, or even on the financial services side, some of the kind of more kind of what could be automated sort of like billing tasks. But then when we get to the policy lens for this, and we think about where the government's going to look at developments in this space always with the concerns first, in kind of three buckets. They're going to look at the consumer protection bucket, and then they're going to look at the kind of financial safety and soundness bucket, and then the kind of overall global, security kind of bucket. And what could this mean, for each of those three areas. And I think that there are a lot of questions immediately raised, like one being, if a consumer has a problem, right? They said, I didn't want to buy this, or there was a mistake here, kind of like, what is the recourse there? And like, kind of who's ultimately to blame or taking responsibility, particularly if something either goes wrong, like the AI does something it was not supposed to do, or if there's a criminal activity involved, an account takeover, something like that, money is being moved. And if the consumer, I think one of the top concerns is if the consumer has gotten so comfortable that they're not really checking, then how do the problems get identified? When do they get identified? And then kind of what is the recourse for solving that?
That's so interesting. That's like the kind of the constant kind of feedback to seamless experiences is like, do you need to have a little bit of friction in there just so that people are actually paying attention to what's going on? Edo, you had a point.
Yeah, no, I just wanted to add, because I agree with what Kate was saying. I think the one of the key part of this process is when you think about your purchases through the card is you're protected by chargeback rights. So if something didn't happen correctly, then you can request a chargeback and get the money back. In this agentic AI type of world, the line of whose responsibility it is becomes a little bit more blurred. So as Kate was saying, I think also companies like Visa and Mastercard will need to think about how they embed those experiences into their rules and the ecosystem, because it's not going to be as black and white as it used to be. So I think it's an interesting point to consider as well.
I think the other thing to think about here is if we change the perspective a little bit and think of agentic shopping as another extension of, say, online shopping or any kind of digital shopping that we have been doing so far. The risks are similar if exacerbated. The benefits are similar if more enhanced. But I think the thing to come down to here again, as with anything to do with AI, is the data. Now think about the huge amounts of data that is being collected and being processed as part of this experience. The moment I upload a photograph to Google, it knows exactly everything that there is to know about me, right? My height, my weight, my whatever personal characteristics that are going to enable me to buy a dress. It also knows what my preferences are, what my budgets are, what kind of clothes do I buy, therefore, what kind of disposable income that I might have. And it can create this massive tapestry of information about every single thing that I am buying, and not just buying, but even thinking of buying. Now, just like that could be used to do all sorts of negative things like financial crime and fraud, and even sort of nudging me to buy more, or the agent perhaps making mistakes out of lack of information or deliberate maliciousness also, that same data could be used to do better. We could use that data to be able to create better financial habits. We could use that data to say, hey, Aditi, this is the third blue dress you've bought in the last 3 days. Like, what is wrong with you? And if we literally think along those lines of saying, how can we use that information? How can we use that data to perhaps inculcate better financial habits, to perhaps automatically start things like, oh, wow, you're actually buying the third personal trainer session in this week, maybe I need to reduce your insurance premium a little bit. Like, that map of data connections that something like this could draw is also a positive thing that we need to think about. So I think like all of these questions arise because of that data and how that's being used and who that's being used by. But at the same time, there are some answers that can also be created by the correct use of that data. And I think, as with anything related to payments and technology, it is the how of that use that will dictate whether this ends up being like a brilliant thing or a really dangerous thing.
I love that point almost about the coaching, the kind of like putting a little bit of a pause there to say, or even offering you an alternative to say, this dress costs this much, but here's a very similar one, from another source that costs quite a bit less. But I also wonder though if that could be flipped. Like, if they do, if the AI does know a lot about your financial situation, could then the retailers start offering you a higher price because they think, oh, she can afford this. So, we'll, kind of like consumer-based pricing.
Like airlines do at the moment. Yeah.
Yes.
Absolutely.
Yeah, exactly. Yeah. So that I would not want to see.
Exactly. And I think that's why it is, I am often skeptical of the amount of guardrails at the speed at which they need to be actually being put in any of this. And which is why the more control on that decisioning we give up to the AI, the harder and harder it is going to get to make sure that people are not being taken advantage of. Because maybe like Kate, you and I might think about this, right? Like we might know exactly what these tools are doing. But there are so many 17-year-olds out there who are on the internet using agentic AI who have no idea of how to manage impulses, information, and therefore consequent actions. And I worry more than I am excited in this realm.
Yeah. I was just going to say, I think that's such a good point too on the kind of the next generations who are not experiencing the growth here and are just going to be coming into like a full-blown, AI system, and that's what they interact with. And so, perhaps they have never gone to the mall, or they've never, had to check their personal finances and make sure that their everything on their credit card statement is what they actually purchased, or whatever it may be. They don't even have that's even that skill set to begin with.
That is an excellent but slightly terrifying point. There's like a whole generation that just don't know how to do sort of normal in real life shopping. Everything's sort of digital, but also automated as well. Like if it's it's all done for you, you don't actually know how to check the kind of the checks and balances yourself. So there's, to Aditi's point, there's probably going to be a certain amount of guardrails and or education that is going to be needed alongside this, because we can get very excited about this because we kind of know what we're looking at, but if it becomes too normal or too normalized without addressing some of those concerns, that's where it becomes a little bit more worrying. We will definitely
to end on a slightly happier note.
Please do.
Would you say yes to somebody who proposed to marry you and used an AI agent to buy the engagement ring?
Is the AI agent trained on me or him? Does it know my preferences or theirs?
Because I saw on TV there are so many TV shows about the process of buying a wedding dress, and you know what your mom says and your sister says, and they make this entire reality show on it. Imagine what happens to that entire industry if agents start doing all of this for us. Like, it'll be a fun thing to watch.
There's probably a reality TV show in that as well.
Yeah, fair enough.
Changes say yes to the dress for a very different format, but
yes,
I'd be here
exactly.
for it.
I think that's the one I was referring to. Indeed.
I love it. So on that note, we're just going to take a quick pause here. Back very shortly.
Llegaron los nuevos McCrispy Strips, listos para aventurarse en la mezcla de mayo ketchup, la barbecue que quedó en el fondo de la cajita, hot fudge sundae y en la nueva creamy chili McCrispy Strip dip. Los nuevos McCrispy Strips, ahora en McDonald's. Ba-da-ba-ba-ba.
Cybersecurity is the top concern for UK businesses, according to Vanta's recent State of Trust report. But whether you're a startup founder or an experienced security professional, Vanta is here to help. Businesses use Vanta to establish trust by automating compliance needs across over 35 frameworks like ISO 27001 and SOC 2, centralize security workflows, complete security questionnaires up to 5 times faster, and proactively manage vendor risk. Join over 9,000 global companies like Flow Health, Synthesia, and Alica Bank, who use Vanta to manage risk and prove security in real time. For a limited time, get $1,000 off Vanta at vanta.com/insider. That's VANTA.com/insider for $1,000 off. Welcome back. Before we get back to the news, we want to tell you about our latest Insights episode. You may have heard the terms unbundling and rebundling being bandied about, but what do they actually mean? And more importantly, what do they mean for the future of financial services? We're joined by guests from Skillit, MasterCard, and Primer to find out. The episode's out now. Just head to the podcast below this one in your feed. Back to the news now. And our next story is that the CFPB is to ditch its open banking rule. The story was in Finextra and many other places. The US Consumer Financial Protection Bureau, or the CFPB, is moving to rescind its recently finalized open banking rule known as the Personal Financial Data Rights Rule, which was introduced in October 2024. This rule aimed to empower consumers by allowing them to direct their banks to share financial data with authorized third-party providers, thereby promoting competition and innovation in the financial sector. However, the rule faced significant opposition from traditional financial institutions, and with the change in administration, these concerns gained traction, leading the CFPB to file a legal petition to vacate the rule. So, coming to you first on this, Kate, give us the sort of boots on the ground response to this, both firstly in the US and also sort of why is this significant? I know it took sort of between 5 to 7 years to get the first rule rolled out in as recently as October 2024. Why are we having this conversation about rescinding it already?
Yes. So first of all, this has been just an absolutely wild ride. And to kind of set the stage for this, for those who don't know, the US doesn't have any kind of existing sort of overall federal data privacy framework, open banking framework at all. Like, this was the first step that the US really took towards getting to that place. And it was kind of even longer than the 5 to 7 years because Dodd-Frank, kind of the underlying statute, passed in 2010. And then it took us all the way up to the first Trump administration under CFPB Director Kraninger at the time to really kick off that rulemaking process kind of robustly. And then it carried over into the Biden administration, where I think everyone on all sides of this truly digging in on it began to understand how incredibly complicated this actually is. And at the time, the CFPB director at the time said, this is actually going to be the first step here because we're only covering a certain set of data sources. This is wildly complex, and we're going to have to keep working on it. But as you said, I mean, we got to that final rule, and I think it was there were very strong feelings across the board, across industry, and nobody was completely happy with it, but it was kind of like where we were. And now we are really in an unknown space. My concern about it is that we're now in a situation where we not only don't know what the ultimate outcome might be, but we also have no sense of what the timeline might be at this point for getting to that next step. And as we've talked about a lot already about AI, this framework is more important now than it's ever been before. So it's a complicated place to be.
So to your point about it, you're kind of being left with no information, does that mean they've sort of said they're rolling back this rule, but they haven't said whether they're replacing it with anything or they're just not having a rule? Is that still an unclear ground?
Yes, it is unclear. So they have said that it's been a constantly shifting landscape. So we've heard quite a bit about, at first it was sort of reopening and making some tweaks to the final rule, and then kind of actually we need to start over. Whether or not they would actually start over, I think, is a big question, because I think it's more likely they would probably kind of start with that existing framework where we got to in October and build off of that. But it's a huge unknown, and I think there will be there's going to be stakeholders who are pushing for them to reopen the rule, kind of, and actually start over, and with comment letters and things like that coming from industry, kind of going through that process. There are others that are going to push for guidance which I think is a more unlikely path, just given how this administration has been reacting to the kind of existing guidance from the Consumer Financial Protection Bureau and the rollbacks there. And then still others who are going to push Congress. Congress has been working on a federal data privacy law for many, many years now, and we still don't have one. But there's going to be, I think, increased pressure on Congress to probably put some aspects of that final rule into statute to try to advance the ball there. So it's very, very up in the air.
Wow. And what does that mean in terms of, obviously over here, open banking was a big thing to kind of open up innovation, competition in the space. How much does sort of rescinding that in the US kind of take away any of that competition and innovation?
So I think the biggest challenge that innovators in the space are going to be facing is that we're back in a period of big uncertainty, which we were there before. But in a way, I think it's even more intense now, because as we were moving through the rulemaking process, a lot of financial institutions were starting to kind of get organized for what seemed like the inevitable coming of some version of a final rule, whatever that might look like. And so they were trying to figure out, how to get compliant with it and prepare to get compliant with it. Whereas now, I mean, another, possible outcome is more delays, and maybe nothing happens, for the remainder of this administration. And so there's probably less pressure on the financial institutions to figure out their piece of this puzzle, which will make it more complicated for those who are trying to innovate in the space and who need access to that data, which will probably put us back kind of where we were before, with like a really kind of like fragmented approach.
Edo, coming to you, obviously as a fintech innovator and working for an innovative company in the UK that is able to take advantage of open banking and so on, what was your sort of take on this? About, do you feel like this is a step backwards?
Yeah, I mean, definitely. So I have quite a strong view on this, in the sense that as an innovator, for me, it's representing an innovator, it's a setback, and it's not a surprise. I'm not surprised by it, to be honest. I've experienced firsthand in my previous life how different the landscape between US and Europe are when it comes to large corporations and their ability to influence certain decision, versus Europe, where the regulator tend to be a little bit more pro competition. So I wasn't surprised, but I'm extremely disappointed. I think as long as it's done in a controlled and a proper manner, giving access to data, allowing consumer to give access to data to third party, brings far more innovation for consumer, far better product, and ultimately a better consumer proposition. And so taking that away under the sort of idea that financial institution quoted things like data security and so on, to me, those are a little bit excuses not to do it. We just talk about agentic AI and how much innovative we can be. And on the other side, we got banks that were saying we cannot open up the data because of data security breaches. I think it's a little bit of an excuse, and it's disappointing to see that there has been the setback. But I do believe, however, that innovators in the US will find a way to get where they need to. It's just going to be another barrier that they need to go through.
Absolutely. Aditi, what were your thoughts? Obviously, like, there's a few pieces of legislation that have already been rolled back by this administration, such as the buy now, pay later. A couple of lawsuits have been dropped about fraud on Zelle, and equally a sort of rule about oversight of tech giants has been removed by the Senate and House of Representatives. Like, should we be worried that there's more to come?
I really, really wish this would not have happened. And my primary reason for wishing that is, if I look back across like years and years of working in banks, with banks on transformation processes, there is one inevitable truth, which is that necessity is the mother of invention. Unless they are forced to do it, they will not. They will never try to fix something which is not broken. So unless you show that this is not fit for purpose and it is broken, you're not going to get change and you're not going to get innovation. Launching this rule and forcing banks to be able to share information would have made them do what it takes to clean up their data estates, to put the right checks and security measures that are needed to, like Edo said, tackle those excuses on data security and privacy and the other. And most importantly, it would have finally pushed the US to take their payments and infrastructure into the 21st century. There is no single standard for API connectivity. There is no single payment rail that can create exchange across all those different organizations that participate in that. People are still signing checks for every little thing that they buy. And I think this pulling back of this rule is definitely a step in the wrong direction. To your point on what that means for regulations and so on, I think, again, it would have forced that change to happen. It would have forced new companies to come up with new solutions. It would have forced banks to finally adopt those solutions and make that change, as opposed to battening down the hatches and drawing their own little boundaries and saying, this is my payment system and this is my process of doing it and this is the information I will not share. I do feel, though, that perhaps it might have been a little bit of a overstep in terms of capability. So if you look at the scope of Rule 1033, it applies to a much wider set of organizations than open banking initially did in the UK, for example. It was only the 9 biggest banks and building societies, whereas in the US, it's meant to apply to banks and credit unions and fintechs and PSPs, a much wider array of participants in this. The data that we started sharing in the UK is essentially account data, so transaction history, balances, payments, and so on. In the US, it's meant to cover, again, more types of data, so deposit accounts, perhaps bills, fees, terms and conditions. So it just opened up the space a little more for more people to create objections and excuses. Like Edo said, it might perhaps have been better to start small and then build as we go along. But again, these are just debates and conversations for us to have. All that I can hope is that it does change. And again, Kate, to your point, there is something new which replaces this as opposed to just being given up.
Yeah, because I mean, your point about sort of being forced to is what drives it. I mean, we're it's all very well for us to go, yes, we've had open banking since 2018, but we had to force the CMA 9. They all missed their deadlines. They were all extended over and over. Like, there is not a keenness in any bank to do this. It's only when they've been forced. But Kate, what's your thoughts on that, on them sort of needing to do this rather than being asked to do this? And also on Aditi's point about the scope being so large of the proposed rule.
Yeah. So I think so on the first point, I think we even saw that start to happen, right? When just the financial institutions knew this was coming and knew they were going to have to figure it out and they were already starting to figure out how they were going to get compliant even before we had a final rule, just through that rulemaking process and following it and reading the writing on the wall of this is the future. We're going to have to figure this out. There's a staggered implementation deadline based on institution size so that the smaller institutions had more time to get organized, but still, there were a lot of conversations around, okay, we're going to have to get ready for this. How are we going to do that? What do we need to implement? And it's interesting on what you said on the data, kind of the scope of the data, because one of the primary criticisms from, I'd say, particularly the fintech side, but some of the consumer groups too, was that it didn't go far enough, which created some complications for the CFPB too, because a lot of groups were saying, where's the investment account data? Where's the payroll data? Like, this is not a full picture of a consumer's financial life, and we need this other data. And the CFPB did run into that, like jurisdictional, we don't actually have any authority over a payroll provider, for example. So that was, I think, when Director Chopra talked about, like, this is the beginning, and we're going to have to figure out, how to get to those other types of data sources. But a lot of conversations here were that it, at least again with those other two groups, were that it didn't go far enough on the scope of the data.
Interesting. So there's a lot of uncertainty. There's a lot we don't know, but there's a lot we hope for from the sounds of this conversation. So let's wait and see. Let's see what happens. But hopefully, Kate, we can get you back when there is a direction of travel. We can unpick it again then. I'm going to move us on to our last story for today, which is that Kakao Pay, and I very much hope I'm saying that correctly, but apologies if I'm not, plans to acquire SSG Pay and Smile Pay for digital optimization in Korea. The story is in the papers. Kakao Pay is reportedly in discussions to acquire two mobile payment platforms from South Korea's Shinsegae Group, SG Pay and Smile Pay. The proposed deal, valued at approximately $365 million, aims to enhance Kakao Pay's position in Korea's expanding digital payment sector. The transaction is expected to facilitate the introduction of new financial products within Shinsegae's customer ecosystem. This acquisition will expand their reach to over 25 million new users in South Korea, strengthening its presence in both retail and online marketplaces. So this is interesting. This is a market that doesn't actually get a huge amount of airtime on this show. We don't habitually hear too much about the Korean marketplace. So this is super interesting. If we look at the Korean digital payments market, obviously you get the big names of Samsung Pay, but there's also Nava Pay, and the digital payment market is projected to reach $197 billion in 2025, obviously led by a huge amount of internet infrastructure and high smartphone penetration. So what was your initial thoughts on this? Perhaps if I come to you first, Edo. This is obviously a massive acquisition they're trying to do to strengthen their position in the market. What was your take?
Yeah, for me, I cannot say I'm an expert on the Korean market, so I don't position myself as that. But my initial reaction is obviously it's an interesting acquisition because it brings together different capabilities that hopefully will give the ability to give better solution to customer. The only question for me is, will this create a disruption that is, will we create a dominant position for a player which then limits somehow competition? That's my only question. However, what I know about the Korean market is quite fragmented. So ultimately, a little bit of consolidation is probably necessary. And some of the biggest players, like you mentioned, like you already mentioned, Laura, like Samsung and Kakao Pay, they're probably looking at that. So I see it as probably a positive, something that will give better value to consumer with the watch out of not creating like a sort of, I wouldn't call it monopoly, but a dominant player that then becomes a bit more sluggish and less innovative in the future. That's my thinking.
Yeah, no, that's really interesting. You want them to sort of become, like a 10-cent or a Grab Financial or something where there's a lot going on, but there's a lot of innovation and
innovation
so on.
inside. Exactly.
Aditi, what was your take? Does it show a sort of change in customer behavior if they're sort of looking to get more and more sort of digital payments under their umbrella? This sort of shows a consumer demand, I would assume.
Yeah, I think there's a couple of things about this story that I found interesting. One is actually the flip side of what Edo just mentioned. The reason Shinsegae, again, if I'm pronouncing that correctly, chose to sell these two arms was basically rationalization of their own balance sheet. And just like on one side, we're seeing these platforms like Alipay and like perhaps even Kakao trying to expand the verticals across which they operate and the different parts, or rather the different pies that they have fingers in. There are also companies like Shinsegae who are trying to optimize their balance sheets and who are trying to kind of double down and focus on what they're good at. And I do think we will see a lot more of such handing overs happening, especially in the Asian market now, because that's where quite a bit of FDI is going. That's where large conglomerates are starting to think a lot more in terms of profitability in the new market environment and so on. So that's one interesting aspect of the case, looking at it from the other side. But the other one, to your point, in terms of consumer behavior, I think the fascinating thing about Asia is just how fragmented and how incredibly different it is from both a technological adoption perspective and also a cultural reaction to technology, payment systems, and digitalization in general. So if you look across the market, Japan is still an extremely cash-heavy economy. So about 60% of any kind of transactions in Japan are still done by cash, whereas I think in South Korea, it's just about 16%. It is one of the markets with the highest mobile phone usage across Asia or anywhere in the world, really. So it is very natural for Kakao to think that there are so many people who have access to mobile phones. There are so many people who are very familiar and comfortable with that technology. And this is a great way of getting access to that market share and then effectively becoming a part of the rising uptake for digital payments and e-commerce and mobile payments in that market.
That's that's a really great point. It's sort of like bringing it to where people already are, essentially, with that smartphone penetration. Kate, on the regulatory side, could the sort of layout of the regulatory landscape in Korea help fintech growth in the same way that sort of the competition mandate over here did? So, for example, in 2019, they had a special act on financial innovation, which encouraged experimentation. And they've also got a promotion of innovation through regulatory sandboxes. That sounds kind of familiar to how things went over here at the kind of creation of the FCA and sandboxes and Project Innovate and all of that. Sounds like a good thing, right? What's your take?
I think so. The U.S., I think, also looked at what the FCA did with a lot of interest, and we went through a period actually of both some federal level sandbox experimentation as well as state level, and didn't get a lot of traction here for quite a few different reasons. I think one is just that we have a very complicated system with a very large number of financial institutions as well as regulators, financial system regulators. And if they're not on the same page, it makes things really complicated. We've gone through sort of a sandbox period. We've gone through some interagency guidance period, and changes from administration to administration on how these things need to be approached. Several pieces of legislation that moved through Congress, some of which tried to require the federal regulators to have sandboxes, which I think may be been a big part of the spark that caused the regulators to start actually creating their own offices of innovation, which they have now, which I think is very helpful. But I think there's a long way to go there for the U.S. Like the regulators themselves need to kind of get better coordination, and they also, we've got the federal state level, the sometimes conflicts or some trickiness there with the states having some of their own ideas about how these things need to be approached. So I think there's a long way to go.
Mm-hmm. And Edo, maybe coming to you for a sort of final word on this one. Sort of looking at the sort of market trends of South Korea that we've just talked about and the customer habits and so on, could they be a credible kind of next fintech hub in that part of the world? Obviously, it's going to be tricky to take on perhaps China, but obviously you've got Singapore competing in the sort of Southeast Asian space, along with sort of Indonesia driven by Grab. What do you think about sort of South Korea's chances to compete globally?
Yeah, I do think there are the right premises for a potentially interesting fintech community. Obviously, the competition is tough. Asia is a very advanced market. You mentioned someone like China and Singapore and Malaysia. There is an offer which is already vibrant. And on top of that, specifically in the Korean market, in the payment space, for example, there is already quite a lot of innovation. So there's competition on margins already. A lot of companies already offer zero to low fee for access into banking services. Monetization of these services are tough. So those elements make it difficult, but the flip side of that is it's a highly digital market. It's a young population that wants to use more innovation. So I think if leveraged in the right way, there is really an opportunity there. I also think that the one of their challenges is how do they capture some of the community outside of the big cities, so the more rural community, older people with maybe products that are more appealing to them. But I think there are the right premises with the challenges of a very, very competitive environment, obviously.
Awesome. Thank you. Well, we will keep an eye on this one, see how this acquisition goes down, and equally just see what happens. And we'll be keeping an eye on the South Korean space, perhaps more than we have been recently. So apologies to them. We will cover them in a bit more detail going forward. Okay, now for a quick look at one more newsworthy story this week that we don't have time to cover in full. That is that UK fintech hiring has surged, and that story comes from Finextra. UK fintech companies are set to increase professional hiring by 32% in 2025, according to a recent report. Hiring in risk and compliance is projected to rise by 29%, with demand for financial crime professionals increasing by 50% and fraud-related roles expected to double. Technology-related hiring is forecasted to grow by 39%, with high demand for engineering, IT management, development, and cybersecurity roles. The surge in hiring reflects the industry's response to real-world pressures, including heightened regulatory scrutiny and increasing operational complexity. So this one is particularly interesting, especially against the backdrop of recent announcements from companies such as Klarna, Fiverr, and others being super bullish on AI taking its employees' jobs. And it's interesting to see that some roles, at least for now, are very much still needed. Also, by seeing where companies are hiring is also indicative of where they're putting their investment. And clearly, risk compliance and cybersecurity is super high on that list. Despite it also being pegged as something that AI can support with, clearly the human is still needed. And it's also comforting to see hiring on the up and up again after all the layoffs of 2023. So it's a good sign for the industry overall. So we will definitely be keeping an eye on that one. And let's see where it goes. And finally, a bit of a different topic to end on this week, still actually staying in that side of the world. So Singapore considers caning as scams jump 70%. So the story was in payments. In reaction to a significant surge in scam-related crimes, Singapore authorities are considering more stringent measures, including the reintroduction of judicial caning for severe scam offences. In 2024, Singaporeans lost approximately 1.1 billion Singaporean dollars, or 821 million US dollars, to scams, which is a 70% increase from the previous year. This marks the first time scam losses have surpassed the 1 billion Singapore dollars threshold in a single year. Judicial caning in Singapore is a legally sanctioned form of corporal punishment, traditionally applied to offences such as robbery, drug trafficking, and vandalism. Now, when I first read this story, or I read the headline before I read the story, I thought perhaps caning was just some sort of financial punishment that I had not heard of. It turns out, no, it isn't. It is actually just beating someone. Is this an extreme reaction? What did you guys think? Maybe let's start with you, Kate.
I don't think it would fly here, first off. So I think the issue is a huge one globally, right? We've seen, and it's getting worse right now with the AI-based, scams, or things are getting harder to track. They're getting harder to get ahead of. So, I'm sympathetic to wanting to find a strong deterrent to that, but have a hard time wrapping my head around this particular one.
I mean, is it a strong enough deterrent? Like, back in the day, that's what they did to kids in school. But was it enough then? Aditi, what do you think?
So I have an interesting take on it. Again, I grew up in India, so I don't think it has changed my tendencies for wrongdoing at all from school days. But seriously, though, I lived in Singapore for a couple of years before moving to London. 2 weeks, and this was a long time ago, like more than I'd say 15 or so years ago. 2 weeks after I moved to London, I attended a self-defense workshop organized at work, run by this global celebrity martial arts trainer. And I'll never forget what he said to me. The first thing he said to me was, "You've moved to the UK from Singapore. You need to turn your radar on." And what he meant was people who live in Singapore, they are just not accustomed to being on guard for any kind of wrongdoing, for any kind of crime. Like, everything is just so well organized and run so perfectly, and you never have to be worried about anything getting lost or anything getting stolen. You leave your phone in a taxi and it'll get home delivered within 2 hours. That's the kind of mindset that most Singaporeans have. Now, if you look at the numbers, the population of Singapore is about 6 million people. The population of the UK is about 66 million people. The total scam losses, like you said, is about $800 million. The UK finance report, which just came out on UK fraud, says that scam losses in the UK are about £450 million, so about $600 million. So if you look at the number of people and if you look at the amount of scam losses, Singapore is definitely bearing like a really disproportionate piece of it. And I do think it is just that lack of awareness and lack of kind of forewarning almost that is leading to that. So to Kate's point, I can completely see why it needs like a strong punishment. Though the response seems a little strange. So if you look at the news article, it seems Loretta Ewan, who's the chair of the fraud committee, said that it is a deterrent, but there's also an element of revenge to it. And I read that sentence and I was just like, that's a strange thing for a regulator or an official to want to impose. So yeah, I'm not sure where I stand on this. I don't think it's going to work at all.
No, I think we all agree that there's a huge problem to be solved. Perhaps this is not the way to solve it.
Exactly.
What do you think?
No, I couldn't agree more. First of all, I like you, Laura. When I read the article at first, I thought my English was failing because I had to go and look for what caning was. Being Italian, and then I understood it was actually beating people with a stick, which I was surprised. I mean, I can't add much more than what Aditi and Kate said. I agree with them in the sense that it's a massive problem. Caning, I don't think, is going to be the solution. I think education of people is going to be extremely important. Aditi raised a very good point. The world in Singapore is very different from the world in Europe or the US. And so people not being aware of these issues is not a justification for them to be victim of scam, but one step is to educate them on that. And then you need to look at punishment which are proportionate because it's a crime. Scams are crimes and they affect people in severe ways. But I would say caning probably not the way to do it.
Yes, agreed. Education is the way, the book, not the stick.
Yeah, education. Maybe the government could look at like their own better tech to like get ahead of this, and that might be a better first step. We'll see.
I still can't believe that's a headline.
It's an interesting. At least it generates a lot of discussions, which is I guess
exactly.
Is good.
We all had to read it twice,
exactly.
Which is exactly why it's featured as our and finally today. But on that note, that wraps up this week's FinTech Insider News. Thank you so much to today's guests. Where can people find out a little bit more about you and your companies? Let's start with you, Aditi.
So please look me up on LinkedIn. Would love to chat more. And my company Instabase is on www.instabase.com.
Fantastic. Thank you, Ado.
Same for me. LinkedIn is where to find me. And our website is www.curve.com. So very easy to find more information on Curve.
Brilliant. Thank you. And Kate?
And same for me. I'd love to chat more on LinkedIn. Can find FS Vector on LinkedIn as well as our website. So looking forward to continuing the conversation.
Brilliant. Thank you. As for me, you can find me, Laura Watkins, on LinkedIn or at 11fs.com or, of course, on FinTech Insider. Thank you so much for listening to today's FinTech Insider. If you like what you heard, please make sure to follow us on your favorite podcast platform of choice. And if you really like what you've heard, why not share the podcast around with a colleague or friend? As always, if you want to join the conversation, find us on social media. Just search for 11FS or FinTech Insider or email podcasts@11fs.com. Thanks again. And goodbye. David and Goliath is a story we know well at 11FS. As a challenger consultancy, we're often going head-to-head with household names that have far bigger headcounts than us. And once again, that was the case at the 2025 British Bank Awards. And the result? We took home Consultancy of the Year for the 5th time. Another win for David. What makes this victory even more special is that it was voted for by our clients, the people and businesses who see the impact of our work firsthand. Because in our world, scale doesn't equal impact. And that's exactly how we outpace giants like Accenture and Capgemini. So if you're looking to partner with an award-winning team of fintech consultants helping to build the next generation of financial services, get in touch. Visit 11fs.com/ventures to find out more. Cybersecurity is the top concern for UK businesses, according to Vanta's recent State of Trust report. But whether you're a startup founder or an experienced security professional, Vanta is here to help. Businesses use Vanta to establish trust by automating compliance needs across over 35 frameworks like ISO 27001 and SOC 2, centralize security workflows, complete security questionnaires up to 5 times faster, and proactively manage vendor risk. Join over 9,000 global companies like Flow Health, Synthesia, and Alicabank who use Vanta to manage risk and prove security in real time. For a limited time, get $1,000 off Vanta at vanta.com/insider. That's VANTA.com/insider for $1,000 off.